ExxonMobil and Chevron reporting mixed results for the third quarter, a quarter where crude jumped nearly 29%. ExxonMobil CEO Darren Woods addressing margins on Squawk Box this morning.
Supply continues to remain fairly tight, and so you're going to see margins and prices move pretty dramatically with changes in demand. So as demand settles down, we see the margins and prices come off. If demand spikes back up again or begins to rise, there's not a whole lot of additional capacity response, so we're going to see margins and prices move.
All right, for more on the results and how to trade the stocks, let's bring in Neal Dingmann. He's energy analyst at Truist Securities. Neal, welcome. Good to have you with us. These two companies have been very busy and very acquisitive in the past couple of weeks. Why don't we take apart each of their respective earnings reports, starting with Chevron?
I think both were a bit, I call them both a bit sloppy. You look, both missed on earnings expectations for mine and the street. CapEx even was a little hotter on Exxon's side. So it's not, I call it still on the Exxon side a good quarter. It's not the great quarter that we're used to for both of these. And, again, I probably wouldn't push on the upstream side. For both, it was kind of the chemicals, downstream. There was just some downtime, a lot of different, again, just kind of a sloppy quarter, but a bit sloppier than what I was expecting.
And when you say sloppy, you mean some parts of the business performed as expected and other parts didn't, basically, right?
That's right. I mean, to me, I still look. The main driver for both is the upstream. It's the production business. They both just did some interesting acquisitions. I tend to like Exxon's much more than Chevron's. We can get into that. But again, the primary business I still think is going very, very well. And as you see prices potentially go up, both have no hedges. They're going to continue to, obviously benefit from that. But I think in the near term, you always had different sort of things offline. And we just saw a bit more of that in this last quarter than I think any of us were expecting.
You anticipated my next question beautifully there, Neal. Both companies have done acquisitions in the past couple of weeks. Who did the better deal at the better price?
We like Exxon's much better. We think that the Pioneer, put it this way, Charlie, I think both are going to be a bit dilutive, let's call it for even potentially the next 12 months. But I just think that Exxon bought probably the premier assets that are out there in the U.S. They bought it for a very reasonable price. And I think you're going to see a big upside on that beginning somewhere around, I'll be cautious and say 2025. Whereas, again, if you look at Chevron's deal, I don't mind Hess. But what's interesting is what you're buying with Hess is you're essentially buying a non-op play of Guyana, where your competitor Exxon is your operator. So my point is Chevron basically is buying an asset and saying, all right, Exxon, you're going to be running one of our biggest assets for us going forward. So it was kind of an odd acquisition, in my opinion.
But you get the toy trucks thrown in, the Hess toy trucks. I mean,
you do like those.
That works a lot. So let's talk about more broadly ongoing consolidation in this area. Who will the buyers be? Everybody seems to say there's going to be more consolidation. I'll take them at the word. Who are the buyers going to be, and who are the likely targets?
I think the buyers will continue to be the majors. Even though you could say both have now over 15 years running room, they always want more. I think you have a lot of the large independents. You have names like EOG out there. You have Oxy out there. You have just a host of large independents that potentially would like to get bigger and add more inventory. And then as far as sellers, we've said before, I think number one, there's a host of very interesting private companies, particularly in the Midland Basin, which I think is very interesting. And then number two, we think there's a host of publics, Permian Resources, Cord, Magnolia. I think we mentioned last time on your show, all three in different plays, but we think all three of those could be very, very interesting targets because they all have very, very good inventory.